When events take place that lead to higher uncertainty in the markets, we'll often see a switch to risk-off mode. This means people are playing it safe a bit more rather than taking risks, and this influences the type of assets they hold. At these times, we'll see more capital being moved into so-called safe haven assets. Safe havens provide a buffer against market volatility, acting like a financial refuge when other assets are falling in value. The value of these assets often increase during periods of financial uncertainty as investors flock to them for safety, giving them their safe haven status. So first up is the US dollar, which is probably the most recognized safe haven currency. As the world's largest economy, the US offers a level of security and assurance that few other countries can rival. The strength of the US dollar as a safe haven currency is tied to the country's economic stability. Its well-established and diversified economy, extensive natural resources, technology, and political stability all help to aid this. Unlike the alternatives, the US dollar enjoys the position of being the international reserve currency. That means central banks around the world all have significant holdings of US dollars. This widespread international acceptance ensures that even in times of financial turbulence, there's still high demand for the US dollar, adding to its safe haven appeal. Another critical factor that adds to its reputation is the size and liquidity of the country's markets. This means investors can buy and sell large amounts of dollar-denominated assets relatively easily and without causing significant price moves. And last but not least, the US upholds stringent financial regulations and offers a high degree of transparency, creating a sense of trust and safety among investors. The next currency is the Swiss franc. This comes from several unique characteristics of Switzerland, but one of the main reasons for the Swiss franc being a safe haven is Switzerland's policy of neutrality, which has been upheld for centuries, and it's insulated it from political upheavals and conflicts that often plague other nations. This political stability, along with their low corruption rate, adds a lot of confidence for investors. Another factor contributing to the Swiss franc status is Switzerland's strong and stable economy. It's known for its high standard of living, so the Swiss economy is highly developed and very stable. Now, just like the US, Switzerland's strong financial regulations and secure banking system also enhance the franc's appeal as a safe haven currency. The Swiss National Bank has also got a strong track record of maintaining price stability, which adds another layer of trust for investors, except for one notable event back in 2015. And finally, Switzerland's conservative fiscal policies and its habit of running a budget surplus have also added to the franc's appeal as a safe haven currency. Then we have the Japanese yen, which is another major safe haven currency. Now, a big factor contributing to this is Japan's massive holdings of foreign assets. Japan is one of the world's largest creditors. It's got a huge amount of its wealth invested in foreign assets. So during times of economic uncertainty, Japanese investors tend to repatriate their foreign investments, which increases demand for the yen and strengthens its value. Japan's reputation for fiscal discipline also enhances the yen's safe haven status. Despite dealing with high levels of public debt, Japan has managed to maintain a high degree of economic stability. Now, safe havens aren't just limited to currencies, they also include other assets as well. Like for centuries, gold has been regarded as a safe haven asset. Its value is not tethered to the performance of any single economy or currency, which gives it a universal appeal. Now, part of the appeal of gold is its scarcity and its intrinsic value. Unlike fiat currencies like the dollar, where central banks can print money in times of economic uncertainty, gold cannot be manufactured or replicated. Its supply is limited, which, combined with it being something physical, provides a measure of security that paper currencies simply can't match. It also has a track record of not just maintaining value, but often increasing its value during economic crises or times of uncertainty. This phenomenon is because investors often flock to gold in uncertain times, which drives up its price. Gold is also typically seen as a reliable hedge against inflation. Now, gold can be easily traded in international markets, so it has really good liquidity, which means people can buy and sell gold at a stable price relatively easily. Next, we have government bonds, which are also popular safe haven assets, particularly those issued by politically stable and economically strong countries like the US or Germany. Now, the primary appeal of government bonds is their promise of a fixed return. When you purchase a government bond, you're effectively lending money to that government in return for regular interest payments and the return of the principal amount when the bond matures. So this fixed return is guaranteed regardless of the fluctuations in the wider economy, which provides a sense of predictability and safety for those investments. Now obviously not all government bonds are going to be safe havens because some of them will have a default risk, but countries like Germany and the US, where the chance of them defaulting is very low, those are safe havens because those economies are strong, they've got stable political systems, so it makes it very unlikely that they'll default on their debt obligations. And finally, government bonds are highly liquid. There's a huge active market for them, which means investors can buy and sell these securities really easily. This liquidity means that they can convert their bonds into cash if they need to very rapidly, which is a critical feature for any safe haven asset. So if you're new to trading, don't forget to subscribe for more trading lessons for beginners, and check the link in the description box for our free training to learn more about my trading based on over 20 years in the markets. Thanks for watching.